welcome. You're watching First Stick here on News 9. I am Suyash Maheshwari and with me in the studio as always is Amit Ranjan. Now, Indian markets opened gap up after BJP's thumping victory in 3 out of 5 states that went to poll this year. Now, Amit, the exit polls on Thursday pretty much, gave a slight edge to, BJP in 2 states, your Telangana, in your MP and Rajasthan, and it also gave Congress 2 states in Chhattisgarh and Telangana.
It was mixed.
It was mixed.
It was Madhya Pradesh and Rajasthan. Most of the exit polls, most of them, not all, had given an edge to the BJP, but some of them had given an edge to the Congress. Chhattisgarh, almost everybody had given an edge to the Congress, and so with Telangana also it was mixed. Some were giving an edge to the Congress, some were giving an edge to the BRS party.
And I think one of the factors, the surprise factors for the market, why we saw a rally on Friday was that perhaps BJP coming into power in Madhya Pradesh. That was a big surprise for the market and we rallied to all-time highs. The big one came out yesterday and BJP has had a clean sweep in 3 states. And Chhattisgarh was a big surprise. Most analysts were not giving BJP any chance before the elections. The exit poll come out. There's a neck-to-neck competition. The margins are low. Perhaps BJP could take it, perhaps not. But the polls came out and majority in all 3 states. Now Telangana was a gone case anyway. BJP was not in the race. Yeah. But the good thing is they have increased the number of seats that they are holding.
Their percentage vote has doubled, it seems. So it has gone up from around 7% to around 14 to 15%. So it's an up. So and markets have reacted accordingly, as you can see today also.
A big opening for the markets. If we can pull up the numbers, Indian markets opened gap up with Nifty above 20,600 mark. The market is holding on to those gains. We are just about 30 points shy of it, as you can see on your screen. As of 9:30 a.m. this morning, Nifty was up 1.5%, just trading below the 20,600 mark. Sensex was also up almost 1,000 points. Trading above 68,514 and that index has also hit an all-time high levels. The party continues in the broader markets. Both indices have scaled new lifetime high and volatility has in fact slipped by about 1.35% this morning and India VIX currently holds at around 12 sort of levels. But to discuss all that and more, let's also bring on board Avni Bhatt, Senior Vice President at JM Financial. A very good morning to you, ma'am. Thank you for joining us here on First Take. Now, a big rally for the markets. November, we rallied by about 6% or so. A good start for the markets in December. Also, both sessions we have scaled new lifetime highs and a massive gap up opening. In today's trade. Where do we go from here after a gap up opening like that? What should be a strategy for a trader?
Good morning, Suyash. Good morning, Amit. And a very good morning to all the viewers as well. So it's indeed a very cheerful morning. Now, the question playing on everyone's mind is now what? So since we have seen Nifty open with a gap up opening, now as per the Friday's data, the resistance was at 20,400, which has been taken out via the gap opening. So where are we heading next is I think we are heading slowly, gradually towards the 21,000 mark with some minor hurdle at around 20,600. Today morning also we've seen it opened at around 20,600 and as of now it's just trading around those levels. If we are able to close about 20,600, then eventually we will move up to 20,100. Since markets are rallying big time, also we may see some selling out, some profit booking from 20,600 levels. But the supports have moved up. The immediate support is at 20,400. The earlier resistance now becomes the support and 20,200. So it is a buy on dips market. If at all we see some kind of profit booking, we should be utilizing it as a buying opportunity. 21,000 is our target. That's the view on Nifty and Bank Nifty. Of course, it has been the spoil sport all along. But as we had discussed last week also, it's the Bank Nifty index that has to participate if at all Nifty has to move up. And since the time we saw Bank Nifty participating in the rally, we have seen Nifty also make a new all-time high. But Bank Nifty is yet, Bank Nifty is still, away from its all-time high levels. And we should be seeing Bank Nifty move faster than Nifty now from current levels. So it's a good idea to stay positive on Bank Nifty. The levels, 45,000 has been taken out. 45,600 is the next resistance. And eventually we should be heading towards the 46,000 mark. And supports have now moved up after today's gap opening. The immediate support has now moved up to 44,800 and on the lower side at 44,500. If at all we see some kind of profit booking.
And to your point, Avni, Bank Nifty is actually driving that rally. At least this morning, the banking pack is up about 2%. All indices on Nifty, PSU banking space, private banking space, all of them are in the green, leading that rally. And given the fact that it constitutes about 40% of the entire Nifty basket, I think the performance of banking stocks will perhaps, keep the market buoyant going forward. Is it not?
Yes, definitely, Suyash. The view is that from here on, Bank Nifty has to lead the further rally. And all those banking stocks which are fundamentally very good and which have not really performed in this entire leg of rally will now be participating. We are already looking at a very good move in the private banks. So our view is quite positive on the private banking sector, followed by PSU banking, because PSU banking stocks have performed earlier. They are in a consolidating mode, but they should pick up again. But more positive view will be on the private banking space in the likes of HDFC Bank, ICICI Bank, Axis, Kotak. We are seeing a good move and a recovery in these stocks.
Hi, Avni. Apart from the news of elections and the markets rallying because of that, do you think the markets are going to get a further fillip on optimism that the US Fed has said that they will now begin cutting rates early next year, which means there is a likelihood of FIIs coming back to Indian shores even more. They have already started coming back. So do you think that will become another factor in giving a further fillip to Indian markets?
Looks like it's a Goldilocks situation altogether. The bond yields have come down by about 80 basis points. Yes. Fed is now dovish and yes. We have continuity in political regime in India as well.
S&P 500 closed at its highest level, and I don't know whether it's related, and Avni probably will clarify. Gold has surpassed, it's gone to an all-time high. Surged 3% on Monday, and it's hovering around the $2,100 mark. Avni, quite a few questions there.
Yes, Amit. So, in the first place, we'll go back to what we had discussed last week, that FIIs were sitting on the sidelines because they were awaiting the state election results. And the flows should begin post the results. That was the view that was given last week, and we have already seen that FIIs have started cutting their short positions. The long-short ratio has improved. And now going ahead, even if there is no rate cut, but if there is no rate hike, if the rates remain steady, that's also a good news. The flows will keep coming in. FII flows should increase from current levels over here. And we should be seeing the entire Nifty, Bank Nifty, entire Indian market moving up from here. And if at all there is a good news of a rate cut, then the flows in the banking sector are going to be fabulous, and we'll see a amazing rally right up to around 4,700. So we are targeting an all-time high in Bank Nifty as well.
All right. And talking about Bank Nifty specifically, I wanted to pick your brains on one of the stocks that's been in focus, and is Axis Bank. Now the stock has, mid-November it came under some bit of a pressure when RBI tightened the norms for unsecured lending. But since then, the stock has been on a 8-day winning run. It's rallied by about 11% in the last 5 sessions and has hit record high levels. What's your view there? Is the rally perhaps going to continue?
Yes, Suyash, you rightly pointed out, Axis was the first private bank that started rallying. And initially we saw the short covering happening, and now fresh long build-up is also seen in the stock. And if you notice, it's in the open territory. The sky is open for Axis Bank. So from current levels, about 1120 levels, now the support base has moved up to 1046. So I think with some profit booking at higher levels, we may get the stock somewhere around say 1100 or so. The target on the higher side, I think for the December series, it should head towards 1200 mark. So any dip close to 1080, 1090 should be utilized as a buying opportunity, keeping a stop loss of 1046 and targeting 1200.
Hi Avni, there's another stock which is playing around right now, that is Z. Now investors are expecting that the submission of the papers to the Ministry of Broadcasting for the Sony Z merger is likely to happen sometime this week. As I look at the stock, it is down almost 3.5% today, but last 5 days it has been up 1.26%, and if I look at the last 6 months, it has given an earning percentage of over 27.9%. What do you make of Z? Time to wait, or because it is down right now, investors can get into it at this moment to register some gains later in the week?
Yes, Amit. So Z, if we notice, it has seen some, if we purely go by the data, we did see the profit booking happening today morning post opening, and it has not held on to the gains. But at the same time, since morning, just today morning, in the first half an hour of the trade, we have seen a lot of unwinding happening at the 270 call in this particular stock. So although there is profit booking and there is a lot of addition at 250 put. So in fact, for the December series, highest open interest is also at 250. So technically, if at all the stock comes down to somewhere around 254, it's a good buying opportunity, keeping a stop loss of 246. We should be seeing the stock regain some ground in the later half of the month. And targets for the stock would be somewhere around 285 to 290. So not a very big trading opportunity, but that's also a good enough rally that one can play for. As a trading bet, we can buy somewhere around 254.
It is at 257 right now, and expected rise later in the month, Avni, as you say. So good time to get in. But apart from Z, what are the other stocks you will recommend today?
Yes. So Amit, as I said, the view is extremely positive on banking, and going ahead, banking is going to lead the entire pack. So I have two recommendations on the banking side. One is the leader, the HDFC Bank. Now today it has opened with a gap up opening, but we would recommend buying somewhere around 1550 levels. And we're targeting 1640 on the upside, and stop loss can be kept at 1520. So there will be some kind of profit booking. You will be getting a stock at the lower levels mentioned, and target is 1640. So one can play accordingly. And the other banking stock is IDFC First Bank. So it is on a verge of breakout. It has consolidated for a very long time, and this consolidation, the bias was always positive. There has been no short built up in the stock. Short covering has started. We should be seeing long build up coming in very soon. So IDFC Bank view positive. We can target somewhere around 99 levels and keep a stop loss of 81. One can enter into the stock at current levels also.
All right.
These are the two stocks from the banking sector. And yes, one is from the PSU banking space. We like PNB quite a bit. PNB is on a multi-year breakout, and targeting somewhere around probably 2-digit figures also could be tested. But technically 96 is the resistance. That's the target on the bank. And you can enter at current levels with a stop loss of 76.5.
All right, those are the recommendations from Avni Bhatt. I think we are all leaning towards a rally in banking stocks, and the kind of movement we are seeing, Avni, I mean, the Nifty Bank has, in fact, is the only index that is building on to the morning gains. It opened about 500 points higher, currently hovering around 45,800 sort of levels. But with that, we'll move on. Thank you for joining us here on First Take, ma'am.
Thank you.
Let's also look at how the markets overall are holding on, because Nifty, I'm made to believe, is still holding on to the morning gains. It's still above the 20,550 mark, just above that, and about 50 points shy of the day's high. And Amit, this is something that we don't really see. If the markets open gap up, and the kind of opening that we saw today, 250 to 300 points higher, we typically through the day lose some of it, but
there's a correction.
No, we are not losing much of it. In fact, just 50 points down. And the mid cap and the small cap space is also holding on to the morning gains. Volatility has in fact slipped, and India VIX is down by about 3% as of 10 a.m. this morning and sitting around 12 mark. But with that, let's also bring on board Mohit Gang, co-founder and CEO at Moneyfront. Hi Mohit, good morning. Thank you for coming on First Take. I want to begin by asking, I mean, the kind of rally that we have seen in the in the last two sessions, first after the exit polls and now after the big results that came out, we opened gap up. And I mean, is there much left for the markets to react, or is it like all the exuberance, has that been already priced in?
Hi Suyash, always a pleasure to be on your show. Look, so I think in this morning we released out a note saying that Christmas has come early, knocking our doors, and I think there is that brilliant nip in the air, and it was very much evident when the results came out, and much to the surprise of markets and people's expectation. I think, look, there was a bit of doubt around how close the results could be, or how closely the elections could have gotten in couple of states, especially Rajasthan and Madhya Pradesh. And Chhattisgarh, I think it was looking like there was no, perhaps Congress would have been a clear winner. But 3-1 margin, I think market wasn't expecting. And the extent of the victory is what is surprising the markets and what is leading us to a big gap up opening. Look, collectively, these states kind of represent almost 60-65 seats in the Lok Sabha. I'm not sure on the exact number though, but that's a good number, right? And I think market is anticipating that the challenge for 2024 is that much more less going forward, and a continuity factor is something which markets just love, Suyash. I think continuity of policies, continuity of reforms, continuity of the infra push which is happening, continuity of the government capex, I think that is what market is loving. Whether this gap up will sustain through the day, I'm not really sure. There could be some profit booking at higher levels. Honestly, I think people will take off something from the table. But on a secular basis, I think now we're looking extremely good and extremely well poised for next 6 months leading up to general elections. I think this is one of those golden times when you cannot sit out and watch and wait for any corrections. You have to be in the markets with whatever your equity allocation is. You have to be just invested.
So over the next 5-6 months to the general elections, to the road to that, can we expect the market to get in a pre-election rally and perhaps go to 22,000 maybe?
Look, I think again, referring to our note today, we are in a Goldilocks kind of a scenario, right? The GDP growth is topping up 7.6% or 7% up. The inflation is well contained, which is almost hovering at around 5% mark. The interest rates are nearing peak levels, and we will see a rate cut cycle following next year or next financial year, perhaps, right? The domestic flows are extremely robust with a $2 billion kind of an SIP flow. The FIIs are turning back to the markets. And to top it up, the US 10-year yield has corrected almost 80 bips in last 6 months. From a peak of 5%, we are down to almost 4.2% out there, right? So I think the overall sentiment and the mood, the manufacturing push in the country, the capex growth, the consumption cycle, everything is looking extremely promising. It's too good to be true, honestly, at times. And you can argue, if you want to argue from the other side, you can always quote out the high valuations, which I completely confess and agree that the valuations on the higher side, and obviously there is a looming geopolitical risk always. But I think market has taken all that in stride. We've gone through those cycles, and perhaps this is the time when markets are extremely well poised for a fantastic rally.
That's actually what I wanted to get to you, Mohit, on, was that are there any threats for the next 5-6 months that investors should perhaps watch out for?
Uh, Look, honestly, I think I'll repeat what I said, which is the risk is higher if you stay out of this market. The risk of not being participating in this rally can be detrimental to your long-term portfolios and long-term journey of wealth creation. And I'm being very honest here. The risk of correction, if there is any, around the corner is still small. Those 3, 4, 5% corrections might not and should not actually deter any investor from being into this market. To highlight some factors, yes, I said the geopolitical risk still looms very large. The global escalations going on can potentially lead to serious blockages in some in global transport and logistics systems and the oil markets. Oil, though, has cooled down, but oil always remains a risk for India. And uh, if and but case of a US recession, look, not everyone is on board with how hard the landing will be in US. Will it be a soft landing? Will there be a recession? How severe that will be? We will have to see it as it comes, right? But I think there is a probability. We cannot deny that the US landing might be a little harder than what people anticipate. But again, those are all factors markets have discounted and markets have taken into their stride. The yields have been softening in US and the US economy has been doing extremely well. But investors in India also need to be cognizant of these factors, which is oil, US economy going into a recession or a hard landing kind of a scenario, and perhaps the geopolitical tensions. To my mind, these are three big things to watch out for.
Suyash, I was looking at, good morning, Mohit. I was looking at the speech of Prime Minister Modi yesterday post the victory. Now, he mentioned certain sectors that, according to him, have revived during the last 10 years. And he mentioned steel, he mentioned cement, he mentioned aviation, and he mentioned there's been a surge in the banking owing to more people going in for home loans. What do you make of these sectors? I was looking today at some of the PSUs and all of them are up, whether it is Steel Authority of India SAIL, that's up 1.61%. BHEL is up over 2%. NALCO is up over 2.3%. So what do you make of this? Are these the sectors which were dormant sectors for quite some time that people should begin looking at them again? Steel specifically?
Yeah. Okay. So look, before I answer that part, I'll just add one more point to what I was mentioning before. I think what the markets are loving about this mandate is also not just the continuity of policy and reforms and the infra growth and the capex cycle from the government which is going on, but also that there will be less fiscal profligacy, right? And I think the ruling party has done extremely well to hold on to the temptations of giving a lot of freebies or announcing a lot of freebies and also returning back to the OPS. I think if the results have been to the other side in all these three states, a move towards OPS would have been extremely detrimental to the fiscal health of this country. And I think that is also one big positive which is coming out of this entire mandate. Now, to coming back to your question, all this is leading and fueling to an extremely bullish sentiment on the public sector space. The PSU banks have long been duds in the economy, but I think over last 2-3 years, whatever has happened in terms of their NPS coming down and the books being cleaned and the growth rates now matching almost the private sector space, they are even today, after this massive rally, are quoting extremely cheap compared to their private sector peers, right? And there is no reason why a PSU bank today in this country should be quoting at a 1.5 times book when a private sector bank with a similar kind of growth rates and a similar kind of asset quality is quoting at almost 4 times book, right? And that's being the argument in the market. So I'm not saying that they have to match up to a 4 times book, but yes, there is a headroom available out there from a 1 times book to a 2 times book kind of a thing. So this entire PSU space is looking extremely promising. The kind of steps which government has taken is fueling this entire growth, right? So I think the PSU banking space, names like REC and PFC and now IRDA, they have all been flying in the market though. But those are spaces and pockets which have done exceedingly well, and I think will continue to surprise the market on the upside. Other sector which is looking promising is obviously bank, because any growth which fuels the economy will have to pass through the banking channel. And I think again the private sector banks have long been lagging. Now for almost good 2 years, the bigger names in the private sector space has not done well, and my sense is those are the names which will now start picking up. We have seen a decent move in ICICI Bank today morning, and I continue to believe that that private sector banking space will should lead the pack from here on.
Okay, so a good time to look at the PSUs again. Mohit, I'll just break here. We have the excerpt from Mr. Modi's bite yesterday where he mentioned the industries that have revived under his scheme. If we could play that bite right now.
भारत के शेयर मार्केट पर भरोसा चरम पर है। आज भारत के निर्यात के नए रिकॉर्ड बन रहे हैं, यूपीआई ट्रांजैक्शन के नए रिकॉर्ड बन रहे हैं, त्योहारों में खरीद के नए रिकॉर्ड बन रहे हैं, गाड़ियों की सेल के नए रिकॉर्ड बन रहे हैं। आज भारत में सीमेंट प्रोडक्शन बढ़ रहा है, कोयला प्रोडक्शन बढ़ा है, आज भारत में स्टील उत्पादन बढ़ा है, बिजली उत्पादन बढ़ा है। दुनिया भर की कंपनियां भारत में मैन्युफैक्चरिंग के लिए आतुर है। हवाई यात्रा करने वालों की संख्या उच्चतम स्तर पर है। होम लोन में भी, उस सेक्टर में भी बहुत अधिक वृद्धि देखी जा रही है। साथियों, आज भारत का फिजिकल इंफ्रास्ट्रक्चर पूरी तरह से ट्रांसफॉर्म हो रहा है।
Now, Mohit, bringing back the conversation to banking pack and the private banking space, you mentioned ICICI, but we are seeing strong movement across the banking space. You know, banks such as HDFC are finally reacting, and as we know, the entire banking pack constitutes about 38 to 40% of the Nifty basket. So, is that the sector that will perhaps, you know, provide us that further push to all-time high levels, also considering the fact that FIIs are now finally returning back to the markets?
Yeah, totally. Look, so Suresh and Amit, I think the speech excerpt which you played was absolutely relevant, and honestly, I think no one can cover all the spaces in one breath the way Honorable Prime Minister did out there. Honestly, I think he named everything out there, which is exceedingly doing well. Which is right from your domestic manufacturing to your export driven sectors, your aviation, which is booming, consumption, which is booming, the production of steel, cement, and electricity, all three sectors buzzing. So I think this infra theme, the capex theme, the PSU theme, yes, these are all finally living up to expectations, and these have also, mind you, come out of a long cycle of underperformance, right? So market is perhaps catching up onto these things, and we have not yet seen the private capex picking up in this country. My whole sense is after this mandate, and perhaps just after the general elections, if the government were to return to power, and now that the chances have increased, we will see a whole splurge in private capex, which has been lagging in this country. It's only been public capex thus far. It's only government spending which is boosting the economy. I think once the private sector kicks in, this will be a heady concoction. To answer your question, Suresh, yes, I think banking is one terrific space. HDFC again for last 2.5 years, or maybe even longer, has been drifting away. I think all those factors which were revolving around the big merger are now well taken care of. People are aware of the balance sheet, the combined entity per se, and my sense is now that the big banks of the country, which is HDFC, ICICI, Axis, and to some extent Kotak maybe, I think it's high time this pack picks up.
Keeping on banking, you mentioned HDFC, and Mohit, taking on from what you said about PSUs, I was looking at SBI, and that is, while HDFC is up 1.8, SBI today is almost up 3%. What do you make of that, Mohit?
And again, another stock which has not reacted or participated in that rally that we saw in PSU banking space. It was, I think, only SBI and Bank of Baroda that did not move much, whereas we saw a big rally in the PSU banks.
Look, honestly, I think markets have not been extremely enthused about the results of SBI and Bank of Baroda, per se on Bank of Baroda. I think markets were anticipating much higher in terms of growth and everything. Look, I think it's the overall PSU rally which is fueling up, and which is perhaps leading that along with the wave. I think all boats are rising out there. I would still put my first preference on the private sector banking space, and then perhaps on the second tier of PSU banks. which to my mind are more undervalued today, and perhaps are showing more robust growth or on that front, right? So SBI and Bank of Baroda, I will still wait out for a quarter more to see the result quality and the improvements thereon. My sense is. But as I said, a rising tide will lift all boats. So perhaps yes, the overall pack will also do good.
Mohit, specifically with respect to Bank of Baroda, do you think the caution in the market was largely due to their internal issues rather than actual numbers of Bank of Baroda, which was still good?
I think, look, markets don't take kindly to any kind of RBI action on these banks. Honestly, I think when RBI came out and said that they can't be using their mobile app to acquire new clients, I don't think so that got taken. Market took it quite nicely, because finally these banks are trying to go digital the way all the private sector banks have done. And if any kind of what do you say spanner comes out in that, markets don't typically like that. So look, I think there is no doubt that these banks are doing exceedingly well. The quality of overall asset quality is improving, and their NIMs have been consistent and decent. But I think overall, when any kind of an RBI action comes in, markets don't take that kindly. My sense is, as I told you, one more quarter of result, if they show good performance out there, I think markets will again start watching out to these stocks positively.
All right, and before we let you go, Mohit, the large caps are finally participating in the rally. Mid caps and the small cap space has been rallying for quite some time. I think in November alone, we saw a rally of about 10-12%. Mid cap index is on a 20-21 day winning run. So is the small cap index. Time to perhaps shift focus to the large caps?
Oh, absolutely. I told that in your show last time also, Suyash, and I think I am today on a relative basis more bullish on the large cap names. Right, in the mid and small cap, though, you will still find those big stories and outperformers, but the find is tougher. Incrementally by the day, right? And to find it at a right valuation is a nightmare. But on the large cap front, you have good valuations, you have great brands, great names, all at a very, very relative price today, relatively cheaper price today. So my sense is, yes, the trade is more lopsided in favor of large caps. But yeah, for those people who can still find and scout for hidden gems, I am sure there are enough and more names available down the ladder also. All
right, that's the view coming in from Mohit Gang. Focus on large caps right now, and perhaps not too many opportunities in the broader markets. Sir, thank you for joining us here on First Take. Appreciate your thoughts.
Thank you.
My pleasure always. Thank you.
But before we wrap things up, let's also look at how the markets are holding on, and they're holding on fairly well. We have not lost much of the morning gains. Nifty is still above the 20,500 mark as of 10:15 a.m. this morning. Nifty 50 was up 1.41%, up at 20,553 mark. At the day's high, which is also the record high, we got to 20,602 levels on the index. On the downside, we got to 20,518. So pretty much trading in a range of about 80 points or so on Nifty. And, 20,500 looks to be providing some sort of a support for the index. The Sensex, which by the way has hit an all-time high session in today's trade of 68,587 mark, is also holding on to the morning gains. The index is up about 1.35%. or 920 points at 68,394 mark. The mid-cap index is almost up 1%. Nifty mid-cap 100 as of 10:15 a.m. this morning was up 0.99% at 43,811 mark. It touched an intraday high above 44,100 levels. The small cap index is also holding on to the morning gains. That scaled 14,400 mark for the very first time. In fact, went up as much as 14,500 in the morning trade as of 10:15 a.m. Nifty small cap 100 was up 1.17% at 14,406 mark. Volatility index India VIX, it looks like it's down by about 3% and near the 12.4 mark. And I think a slip in volatility will perhaps also augur well for the bulls. And again, Amit, it's very rare for a market, after opening gap up by about 300-600 points to hold on to those gains.
Yes.
And we are also seeing some segments of the market like your banking pack building on to the morning gains. Nifty Bank is still up about 2%, hovering around the 45,700 mark, and the heavyweight banks are leading the rallies. SGFC Bank, Axis Bank, ICICI Bank, all trading in the green, up 1.5 to 2.5% this morning. But with that, we have completely run out of time on this edition of First Tick. Keep watching News 9.